it's a big week of trade, and for the day, which are some of the key stocks which individual traders and investors they should focus on? Let's discuss that with our researchers, Navneet and Yatin. Navneet, you go first, and let me guess, NBFCs. That's the talking point, isn't it?
Good morning, Nikunj. Yes, that will be the talking point. But besides that, you have other large cap stocks too. Well, I'll start off with Ranbaxy first. Positive news coming in there for the company, as Ranbaxy has said that it will be restarting the production of its generic drug Lipitor, which it halted around 3.5 months back when there were fears of drugs containing some tiny glass particles. And the company has received US FDA approval to restart the production. Well, if you look at the market share, it had fallen to about 5% after touching the peak of 45% after it halted the production, but now the analysts are saying they expect the market share to touch 15% in the coming 2 to 3 weeks. Keep an eye on Ranbaxy, there could be a positive reaction. Moving on to the auto space, well, keep an eye on Maruti and Tata Motors, as today newspaper reports suggest that the CCI is likely to pass an order against the auto manufacturer in the month of March. Well, the order could be passed for as many as 17 manufacturers, and the charges will be for misusing of dominant position to sell spare parts at high rate. And lastly, do keep an eye on ONGC and Cain India as well, where reports indicate that ONGC has refused to share cost of further exploration for Rajasthan fields. Remember, ONGC holds about 30% stake in Cain India's operated fields, where it says as per the production sharing contract, ONGC's involvement comes only after the commercial discovery has been made, and it reserves the right to participate in exploration programs. So keep an eye on both these counters, Cain India and ONGC, on back of this news.
Okay, and Yatin, what's the list of small and mid caps looking like?
Good morning, Aisha. We'll keep an eye on Orient Green Power, and the stock has been in news on the back of various problems that is faced from the state electricity boards. But now the promoters are looking to infuse close to 150 crores via the preferential route. The promoters would hike their stake by 17.6% via buying 10 crore shares at a price of 15 rupees per share, which is almost at a 16% premium to the current market price. Also, because there is SEBI regulation that promoters cannot hike stake by 5% in one financial year. This stake hike will also result into an open offer, which will be followed by the preferential issue. So 17.6% is via the preferential route, which will be followed by a 26% mandatory open offer, which will be given by the promoters at again 15 rupees per share, wherein the acceptance ratio would be to the extent of 100%. The stock price will converge to the preferential issue price, which is 15 rupees per share. On Friday also we saw the stock up nearly 15%, and today also there is a similar gain expected as far as this stock is concerned. So let's see how the stock reacts to this one after the promoters have been collectively looking at the investment of 300 plus crores, which is the preferential issue and the open offer. And finally we have Titagarh Wagon, and an interesting development coming in here before the railway budget. They have called up the joint venture with the American company in order to manufacture coal-based aluminium wagons which are used for transportation of coal. This joint venture was called off because the design approval was still pending after 3-4 years of application with the Indian Railways. Right. So on the back of the delays of approval, this joint venture has been called off. Let's see how the stock reacts to this particular news bit.